There's a seasonal pattern that plays out in the markets. Not only is it on the stock markets like the S&P 500, the NASDAQ, the Dow Jones, this odd seasonal pattern continues to play out on the markets year after year. In the case of Bitcoin, coming up to 15 years. And for the stock markets, you could go back decades. There seems to be some sort of crash or catastrophe that happens around this seasonal time. And that seasonal time is now. For our friends in the Northern Hemisphere, that of course is your summertime. For us here in Australia, strangely enough, it's our winter. But nonetheless, this seems to happen every single time. Now, it can be on a small scale or a large scale. What we're trying to figure out is how long is it going to last for? What's going to happen after that point? And are we going to survive this particular crash? Hit the like, subscribe to the channel if you're new here. It is your home of macro cycle analysis. I've got a macro video for you guys today looking at Bitcoin and of course the stock markets as well as a dive into August. In particular, the crash that we typically see year after year. So I want to show you what that crash looks like. What's the correction look like? That's for the S&P and also for Bitcoin. Of course, we cover traditional finance and Bitcoin to give us an overview of the markets. And then from that point, what can we expect? The recovery, the opportunities, Bitcoin, in this case, Bitcoin price targets, and then I'll also add in time to the top, traditional and an extended cycle, traditional cycles and extended cycles. And for those XRP lovers, I'll also update the time frame to the top for XRP. Okay, so first up, what is this crash? Well, basically, almost every single year, you see some sort of correction around August. If not in August, which is a very strong case for August every year, it can happen slightly after, like in the case of 2021. So we want to look out for what was the market doing leading into that crash, and then decide whether we're going to see that crash in August or does it come a little later in September that leads into that low of October. So looking back over the previous years, 2024, well, the market was heading down. We were in a downtrend for many, many months. It culminated 5 months later after that top of March into the low of August. The reason, which is what happens with the news after the fact, was for the Japanese yen carry trade. So the fear that there was going to be an unwinding of trades in the US because there was a discrepancy on the currency pricing for the yen and the US dollar. One was going up, one was going down, and it just wasn't going to be viable. Of course, the fears came in dead at the low, and now the market ran up. The markets ran up for the US stock markets and for Bitcoin. That's going to be the similar case for every single crash that we see, almost every single crash, I should say, because we do go through some bear markets for Bitcoin. As for the S&P 500, it's been up for coming up to 16 years. So rather than explain to you with every single crash, hey, look, we got a top, then we got a bottom, then the market ran up, just expect that that is the case. So I'll go through these for Bitcoin, and then we'll also have a look at it in terms of the cycles for the S&P 500. The year before, we had the Binance lawsuit. So I have quite a few of these articles. You can literally just put them into Google, which is what I've done here, so you can get a recap on what they were, or you could go to ChatGPT and ask for all of the crashes that happened in August 2020 or August every single year for Bitcoin or the S&P 500, and you'll see the major crashes that occurred around that time. Why does it happen? Who the hell knows? Could it be something to do with Earth cycles and moon cycles and planetary cycles? Possibly. But for now, we're just concerned with the seasonality, that this thing has a very high hit rate of happening time and time again. And do we see that happening now, or have we already seen that occur? Now, remember, I do have this chart on logarithmic. So you're going to notice that the movements might not look that severe, but they're going to be pretty similar, sort of 10, 15, up to 30 or 40% in some cases. So going back year by year, 2023, Binance was in a lawsuit. Here it is. SEC sued Binance and CZ in June 2023. That led to the decline. We finally got a low in August and September around that double bottom of 25 grand. And from that point, well, it's gone. CZ served his time. Markets are well and truly up from that point. Now, our daily videos cover many detailed charts, data, indicators, and our forte, the cycle analysis, to help guide us through the investment cycle. So if you're a brand new subscriber to the channel, then I highly encourage you to get our weekly reports on Bitcoin, altcoins, and the economy, including the real estate cycle. They're easy to read in under 5 minutes each, making them extremely digestible for all investor levels. There are 3 reports coming your way starting your week from Tuesday. It'll get you up to speed on how we forecast the markets and how we've been able to profit during uncertain times leading into and out of the cycle peak. It's completely free, so subscribe today using the link in the top of the video description and you'll receive your first report shortly. The year before, 22, basically in a bear market, and this came after those big declines from the DeFi basically collapsing, losing billions of dollars. Market bounced from May and then in June, and then it went sideways until we got the FTX final flush out. Markets recovered from that point. Note that in that case for the bear market, that it happened towards the end of the overall bear market. Things were unwinding, of course, over the time, but you typically see a lot of these extreme news stories around the lows. In the case of the big events, around the big lows. In the case of the somewhat smaller events, around the shorter term lows, like we saw in 2023. Evergrande 2021, the Chinese property developer. You can see the news back from that point. It would look like it was going to collapse the world, if you remember. Well, it didn't. Yes, we got a bear market, and that was from the US with fears of inflation and interest rate rises and all sorts. The markets continued higher from that point. So Evergrande actually happened through September. The market ran up into August, so we had a slightly positive August, but the seasonal time meant that we were probably going to see some sort of correction in that Q3 period, which is what we've got. So I also want to look at that with the cycles themselves, how the pattern plays out. Moving down into the cycle, then out into the cycle. But let's continue on here. Flash crash in 2020. Why? No one really knows. As we go back further in the history of Bitcoin, it typically comes up with flash crashes or exchanges getting hacked. And that was basically a lot of the bad news from 2020 backwards. 2019, we also had a bit of a crash through this period right here. And if we take it off log, it was a massive run up of 300%. Markets topped in June and then basically flatlined. August was again seasonally weak. That is August. There was extreme fear at that time. There's July, end of July, and on a daily chart, there was extreme fear, even though the market was still up. So extreme fear and the market continued lower. But that was where that, again, extreme fear came in. August through to September, based out, little rally, COVID happened. 2018, bear market. Here is your July, August seasonal bad period, basically slow. The markets are just not able to do much through that Q3 period. Going back another year, this was leading into the bull market top. You had a seasonal weak time in August top down into September. You also had this correction into August. So if we zoom right in, you were at all-time high prices. We had a pullback into this August, and that pullback was still 20% for the time, which was pretty significant. You still had a lot of fear happening in the market. Another pullback, and then recovery, ran into a new all-time high. So that's why I'm going through each of these, because of what I think might happen next from this point. Looking in particular at time frames, the opportunities that may arise from this, the recovery, price targets, and a timing to a top for a traditional and maybe an extended view here. So that's 2017. 2016, also a little crash in here. Yep, right there. There it is. What do they call it? They called it a flash crash, an exchange hack. Bitcoin, August 2016 crash. There was another exchange hack here, 20%. It amplifies, and of course, more people are losing money. Big losses there through 2016 as the market was climbing. There's June into this low of first week of August. Currently where we sit, 40%. Of course, these are different times, lower market caps, less liquidity, bigger spreads on the market, which allows the market to be manipulated a little easier at the time with less money. But of course, times have changed in terms of liquidity and how much money is in the market. Nonetheless, there is still manipulation going on. So is it really different? Maybe a little less, but there's obviously more leverage going on in the system. So yeah, flash crash, exchange hack. Next one, 2015, August. Bam. Crash into this low after this consolidation. wiped out a few of those stops that were at the lows before it bounced back. So another really good opportunity in a bull market. I still believe we're in a bull market. That's obviously going to be everyone's opinion as to where we are. Some people think the top is in, but you can see in each of these occasions, August 2015, August 2016, August 2017, in that final year of the bull market, tops, corrections, really, really good opportunities after that time. Now, we can keep going back year after year. 2013, you had a correction into June. It ran out into August. September and October were still sideways at this point. So seasonally speaking, after a significant correction, there still wasn't much going on towards the end of quarter three. Quarter four is where things went absolutely wild. 2012, big pullback. Look at that bar in August. That is huge for the time. $15 to $7. So about 50% correction on that week. And then it needed to recover. So again, 2012, huge opportunity after that point. And 2011, crypto bubble bursts. June top, October low, quarter three got destroyed. So yet again, and what was 2011? 12 years ago, greatest Bitcoin crash, more crashes, all that sort of thing. Okay, so there is a lot of reasons why this period of the market continues to show weakness. And in the best case scenario, it's an opportunity within the bull market. So that's the first piece that I've got here. Every time we get this crash that happens in the market, it's often met with an opportunity, whether that's part of the bear market because it's coming towards the end of that bear market, or it's the later stages of the bull market, which is what I think we're currently in. And another, or it could be in the middle of the bull market, which gives you an even greater opportunity. But I think those particular opportunities have passed us now. I think we're beyond each of those August pullbacks within the earlier stages of the bull market. There's the bear market low, start of the bull market, November 22. Here's your first August chance, your second August chance in 24, so 23 and 24. And here we are into August 2025. So timeframes now, it's a good segue into timeframes. Looking at the current timeframes into this top, the first initial timeframe is looking at September based on previous cycles, corrections into a significant low that then ran out into the final top. So that gave it about 20 weeks. So if we look at the last cycle, correction into the low, then there was about 20 weeks left into that final top. So the significant correction that we're measuring from is the April lows. That was the first tariff low. And that rough 20 weeks is about 5 months, which if you add 5 months onto April gives you September. So we may have 1 to 2 months left in, I think, the worst case scenario. Well, worst case scenario if you want the bull market to continue on forever, right? So let's just call it the shortest time frame. Cycle before that, same sort of deal. It had broken past previous all-time highs, it corrected, and then there was about 22 weeks left into that top. So that's why I'm saying possibly later into September. Then you go back to the previous cycle, same sort of deal. Big pullback, move up into that final high. Now, I think at this stage, it's still possibly the lowest chance of happening because of where we're sitting in the 18-year cycle. Now, the 18-year cycle is coming to a peak and then a much, much longer correction than what we've experienced over the last 16 years, going back to the low of March 2009. So I think this next major collapse, recession, depression, whatever happens, is going to be much, much longer than anyone can remember, because a lot of people that are trading the markets now weren't trading the markets through 2008, 2009. So that's going to be wiped out of the memory of a lot of people. So that's why I think this cycle, we have a much better chance of what I guess some would call an extending cycle. Now, I don't like this term because that suggests that cycles are manipulated in terms of how long they go and how short they are. The way I like to look at it is that you've got a stronger bull and then a shorter bear. And then what can happen in the following cycle is that you have a shorter bull and a much, much longer bear. And at this stage, I think that's what could be happening for Bitcoin. If we run up a bit longer, have a shorter pullback into a bear market, and then that next 4-year cycle, not the halving, but the next 4-year could potentially run up into a lower high and then continue to fade out for a much longer period, giving us that multi-year bear market. But that's getting a few steps ahead of ourselves now. We're looking at timeframes running into this final top. And I've suggested somewhere around late Q3, or what I like to look at more so is probably Q4 or early Q1 for something extending slightly based on the reasons that I've just mentioned there. And so those timeframes would take us out to December, potentially into Q1, early Q1, so that January, February period. So that's what I think is happening in regards to those timeframes from this low point, which to me could be the recovery, and this current timeframe gives us the opportunities. Next, we've got traditional finance to have a look at in terms of the cycles as well. What could they be doing? Because if they're not going up, then I don't think Bitcoin and cryptos are going to have such a strong run. We've seen that many times before. We need to see that strength in the traditional markets to have Bitcoin running, and then that risk start to flow out into altcoins as well, which is another couple of charts I've got. So time to the top, had a look at that. Now, in terms of the price ranges on the short term, before I get to TradFi and altcoins, to the downside, should Bitcoin continue to fail here, this is underneath the 7-year resistance level. So you can see with price, 4 months ago, we were watching the support level, or we're watching 106.5 as a resistance, potentially somewhere I'm looking at that as a support around the 110.11 down to 106. Even the 50% level is not the worst case. Should it be a wick? I'll show that in a sec. But 7-year resistance, it is respecting this very, very cleanly. That's this white diagonal that comes from the 2017 top, directly from that top, connected to the 2021 top. And for this cycle, we've hit it once, twice, broke through it on this third time, tested it really, really close on the daily chart here. You can see a lot of action happening above it, tested it, and then broke underneath it. And for now, the last few days, it's come back up to test that level. I just find it so fascinating, however, such a long period of time, the market can come back to these mathematical levels and give them a good test and respect them, more importantly. They're respecting that line at this point, so I still see it as a valid level to continue watching moving forward. To the downside, the support levels, here is 106, which was basically the last two tops were not able to close above 106. And the lowest swing top that you can see right here formed after the all-time high of the presidential top, and then the market collapsed from there. Moving forward, after we got the bounce out of the tariff low and the taco trade from Trump, basically putting tariffs on, taking tariffs off, which allowed the market to basically reverse all of the damage that was done, we can see that 106 again was respected very well. Support, resistance, breakout, resistance, breakout, came back underneath for a couple of days, and then basically found it as support on the way up. So I wouldn't want to see this market consolidate under the 106. I think that's going to look really, really weak long term. And as for the 50% level, worst case scenario, you can see the low back on June before it bounced out to that new high. So there was some strength forming there. So worst case scenario, 99 underneath 106 is going to be a slow moving target for the next climb higher. And for the bulls, ideally above 110, 111, which you can see this line that I'm drawing here right through the tops of those previous swing highs and very close to where that swing low has formed so far. So if August is going to continue being weak, then I'm looking at each of those price targets as a way to measure the strength of the next move. 111.10, strong. Underneath that, average. Underneath that, weak. Underneath about 99. I don't want to go there yet. So how does this look overall with the Bitcoin forward returns? In terms of the patterns from where we sit seasonally, we had a lot of green running into this period, running into Q3. So it wasn't huge moves, but we did see a lot of green, 14, 11, 2% into June. July got the top, and then of course we're currently sitting in August. And what I've pointed out in the previous videos, I'll leave a link to those at the end of this one, so stick around for that, is should we get the pullback in August, so basically a red August or red September, generally we get a good run into the end of the year because we've had time to consolidate, especially at these higher prices. Here is your red August, and 2024 had a reasonably good time, running into that top of March, and then it was consolidation, and then it was able to run well into quarter four. Again, previous year to that, 2023, consolidation mid-year, ran pretty strong into the end of the year, and for the beginning of the next year, which goes back to my extended cycle theory. Again, I don't like to call it an extended cycle, but I think that's what most people think of it as. I just see it as potentially part of the next cycle, depending when the low comes in. Let's not worry about that for now. We're just looking at a good, nice, clean run. Should we get the greens and the reds in this August-September period, and we get a nice run out for Q4. Reds, doesn't really help it if you get multiple reds here. Next year, 2017, green, red, lots of nice greens, red, green, lots of nice greens, red, green, lots of nice greens. So it doesn't necessarily have to be that final bull market year, but you typically see it through each of those bull markets, each of the bull market years within that 3 or so year period leading into that final top. 2013, nice green there. 2012, again, more greens, and 2010, that final move into the top. So that leads us into the cycle analysis, where we are covering Bitcoin in its 5 and 10-year cycles. So I'll move this back so we can get a closer look here. The pattern has pretty well followed suit to the last 5 and 10 years combined. So looking at 2015, which we saw earlier in the video, I showed Bitcoin dumping into that August low. So this is that low here, flash crash exchange. You can see the market movement ran up into March, down into April, similar to what happened this year, found its way out in May, peaked in June and July, actually. There it is, July, and then pulled back. So we're just looking at this in terms of patterns, not in terms of percentage moves. The pattern is up into this time frame, roughly Q1-ish, down into that April period, so late Q1, early Q2, move up into Q3, pull back, and then nice strong finish to the year. Same thing happened back then, same thing happened in 2020, which is represented by this red line as we combine both of the years, 2015, 2020. So yeah, Bitcoin looking relatively good. What happens towards the end of the year? There you go. That's a nice little look into the outcome that we could potentially expect should we get consolidation while it remains above key support levels. Now for the stock markets, because they also need to follow suit. I can't imagine Bitcoin and the worst case here for cryptos following suit if we're not going to see strength in the traditional markets. And for the traditional markets, 20 years ago, Dow Jones, similar sort of pattern. It had lows into that same time of year. It rallied, held its ground, pulled back into, there's an August low, a September low, an October low, and then rallied in quarter four. S&P 500, similar deal here, pulled back. We're looking at the red line. You can see the pattern. Red line pulled back. This is for the 10 and the 20 years. So looking back 2015 and 2005, pulled back, found its ground, put in some new fresh highs for that year. That's what's happened this year. Pull back in August, September, higher low for October this time, and then stronger run in October, November. In each of these cases, December hasn't been so good. And for the NASDAQ, just looking back to 20 years here, crash into April, a bounce, pull back June, another higher price here in July. So basically a local top late June, early July. That's what we've seen for the NASDAQ. Pull back into August, rally. So basically like a dead cat bounce, potentially what's on the cards at the moment. And then a low into September, further low into October, higher low than the rest of the year. So it didn't put in the lowest price for that low in quarter three, early quarter four, and then rallied to fresh highs for the year. Same pattern, each of the stock markets, very strong moves at the end of the year, except for December on each of those occasions. So here it is, S&P 500, and I'm starting this from 1990s because they have the same sort of pattern. So I won't repeat too much I'll just show you how it repeats in the markets time and again with the seasonality. Starting in 1990, going back 35 years. Recession, peak in July, crashed into August, very weak time. 99, similar thing here, correction July, August, September, October low, market rally out of that point. And I think if I continue this on, it's going to make this video extremely long. So here are a look at what occurred around those times. Recession, slowdown fears, big ones from 2014, GFC 2.1, GFC 2.0 fears in 2010, little pullback here in August after a pretty significant correction. So again, weak times with opportunities coming after the Q3 period. Correction into August low, another correction into an October low, and opportunities arise after that time. 2012, rising out of that time. These periods were a lot more fearful than what the current environment is. So if we're going to see the pullbacks, I don't expect them to be as big, one, and the recovery may not take as long, two, the recovery might not take as long because we have less time to go in the cycle. This is the beginning of the cycle. So there is a lot more fear at those lows. Right now, we do see a lot more greed. 2016, pre-election, dump into that November low, big rally out. 2017, 2018, China trade wars with Trump in power. Then 2019, correction into that next top. COVID scare 2.0. That was the correction here 5 years ago. Top in September, corrected into September. Another rally, another correction into late part of October, early November. Evergrande leading into that final peak. Inflation fears with the Jackson Hole Symposium forming in 2022. Actually, it's been going on a lot longer than that, but around that period, the Jackson Hole Symposium, which is what we're coming up to now. Inflation fears, interest rate fears, all that sort of stuff. Correction into, you guessed it, a September, then October low. Middle East fears, that was 2023. There was more conflicts with Israel fighting whoever they're trying to fight at the time. July, August, September, October low. And we got that final low again in October. Another Middle East one just for reference. And Japanese yen carry trade August 2024. And here we are. Are we seeing a tariff 3.0? Because we've already seen tariff 1.0. We've seen a tariff 2.0. And maybe we're into tariff 3.0 at the moment. A couple of days correction. So should this continue on and we see some further downside, the likelihood is that this is all part of the rest of the seasonality. This could take a little bit longer than anything we've seen previously. If it doesn't, then that's basically what we have seen with the largest correction so far in this run up out of the April low. So can we see the same pattern for altcoins? Do we expect them to pump up from this point, the next 20x for August or 20x for September? A quick look at the chart would suggest it is unlikely because, well, it seems to follow a very similar pattern to Bitcoin, which of course follows a similar pattern to the stock markets. Previous years, 30% decline around this July, August, September period. 2023, a 20% decline after it had already been absolutely decimated. 22% decline from the August top to the September low. And then of course the lows continued on from that. That's being in a bear market. Evergrande, September high to September low, 30% correction. Previous year, after a nice big rally out, top in August, bottom in September, 25% correction. 2019, big pump in June, and that continued on, weakness after that big pump up. 2018, bear market. 2017 is the only positive here for the altcoins. July low, rally in August, coming into a peak around September 1st, which then corrected again. So there was still another opportunity there, grinding sideways for roughly 2 months before you had that final month, final 2 months into the top, which came on the 5th of January. So it came a couple of weeks after Bitcoin's all-time high on the 17th of December. Now, although bull markets produce some crazy headlines, huge price targets, they also produce relatively strong trends, nice simple trends to be following. And if you're understanding how to follow those trends, you can make some significant coin. as our premium members have been making. This has been one of the largest trades we have seen, 400,000 US dollars in a month, based on the strategies that we teach in TIA Premium. And so if you're just new into the market, check out TIA Premium, learn how to trade or long-term invest so you can remain with the cycle throughout the years to come. You can continue to build on your nest egg. Along with that, you'll receive our weekly reports and get free access to our community Discord, where you can check out all of the other results from our traders. Link to this is in the top of the video description. So for now, the seasonality seems like it is winning the game for this period of the market being slightly quieter, not necessarily any breakouts. The USDT dominance has continued to hold here at roughly 4.4%. The idea, my theory is we need to get a breakdown of 3.7 to see any sort of real altcoin season, and really seeing Bitcoin to pump potentially past that $150,000, $180,000 range. I think while it remains in this area between 3.7 and call it 4.8, you're probably not going to see those extreme numbers. And should we get to the end of the cycle, as we looked at with that 2 to potentially 5 months to go, and it doesn't break out of 3.7, then that is going to put a lid on that Bitcoin all-time high price. If it can't get past the 3.7, I think it's useless looking at Bitcoin prices at 250,000, 300,000, 4, 5, 6, 700,000. There's really not going to be the liquidity in the game to get Bitcoin to those prices. But nonetheless, we're still going to get some upside here because, well, stablecoins coming out of the market, out of stablecoins, they've got to go somewhere, and I think there's still time left in the cycle. Now for XRP, that time potentially is running out, but I have an update here. So I've been tracking the monthly movements for XRP, and it hasn't done more than 13 months in a row from a significant low point. So this goes for bull markets, within bear markets themselves. It just can't rally more than this 13 months unless it's multiples of this being put together. And the last time I saw this was here, July 2014, that ran into that final top of January 2018. That was 42 months. Within that, extreme movements. I don't say that lightly. Huge moves to the upside and huge corrections. Of course, different time. XRP was worth less than a cent, 85% corrections. Now we're at $3. But in terms of that time frame, taking it from a significant low, roughly around that low that Ethereum had in June 2022, so just a little bit earlier than Bitcoin, still part of this cycle, 40 to 42 months would take us to October through to December. So I've been watching August or September as a potential top here with this 13-month move from the low of July, because essentially it hasn't been able to push past 13 months. It just doesn't have that energy to keep going. But if we look at a full cycle from potentially from this low here, say July 2014, which is before Bitcoin's low. Bitcoin lowered in January of 2015. So somewhere around this point here. That is probably the last piece of hopium that I've got for XRP, where it could extend a little bit further and start to line up more so with Bitcoin's high in that Q4. Otherwise, we're still looking at Q3. You got 13 months up into August, 14 months if it extends and does something that it's pretty much never done before on a pretty bullish move, right? Get up to that 14 months, which would take us out to September. As always, keep watching the charts. The closing prices on the next weeks and months are going to be super important because July closed underneath the January high, ran up, got sold off into the close. That's going to be super important for this quarter. And hopefully if it is able to close higher in August, it can then continue to flow through and do this 40 to 42 months to the upside, hopefully hitting some crazy targets here for XRP. So yeah, I'm not calling any sort of bear market yet, just watching these timeframes that XRP has given us. So for the price targets on Bitcoin, we're still tracking the mid 130,000s. That's still quite a significant percentage increase when you're comparing it to traditional markets. To that first target, roughly around 19%. Your 150, which I guess a lot of people will be looking at, roughly at 31%. and then to the 160s could be about a 45% move. Now, if you're only interested in altcoins, that sounds like garbage. I get it, but I think there is still a purpose here, especially when you're in that crypto space. If you're looking for something that is slower moving and you've got the gains, you just need to put it somewhere as opposed to, who knows, the stock market or somewhere else. There is still potential here, provided we don't see the breakdowns of the price targets that I looked at earlier in this video, in particular around that $98,000 to $99,000 level. And the sentiment suggests that we still have a little further upside to go here. Fear and greed has been resetting over this period. We've hit the neutral, just remaining in this greed part here. In terms of history, we have seen this correct back down to fear and the market hold up, and it typically is a good sign. So if this is all leaning towards this further downside here for Bitcoin and potentially cryptos, but mostly Bitcoin, then hopefully we see that happen over the coming few weeks, which would give us an even better reset on the market. The exchange volume has remained up. Yeah, we've got the pullback here, still above the previous lows, so it's looking okay for now. And the search volume is something that I'm very much interested in. It has actually ticked up again through this week. So we put in a couple of higher lows here for Bitcoin and for crypto on the 12-month outlook, seeming like it is picking up. On the 90 days, I'd say we've got it again. Higher lows forming and a slight break of some of those previous highs as well for crypto and for Bitcoin. Like, subscribe. I think we've got a good ending to the year coming up, even if this period is a little bit of a slowdown. And then if we do see any sort of correction, provided it remains in the strong part of the support and resistance zones, as again we've looked at in today's video, I think we're in luck for the opportunities that arise. Ideally, we get some sort of significant news event that dumps the market to that point, support comes in, and then we begin to climb out of those levels. But of course, I can't make the news, so we have to keep following the charts and seeing what happens from that point. Thanks again, guys. I'll see you at the next video. Hope you enjoyed that one, found some value from it. If you did, drop us an emoji down below. Give us a little love heart down there. Let's stick it with the love today. All right, I'll see you at the next one. Cheers, guys.